because if it continued in that direction, the market would pull back so dramatically or price themselves to the point that then it's not serving the purpose it's there for. So the focus on controls is necessary, but that's a huge challenge for the underwriters that, they look at this and, you could have a list of 80 controls, and if one of them's off, a lot of markets just say, nope, we're not writing that anymore.
Hello, everybody. My name is Mark Greisiger with NetDiligence. Checking in today. I have the good fortune of speaking with my friend and industry expert, Brian Thornton. Brian is president of ProWriters. Brian, thank you so much for being here today.
Yeah, it's my pleasure. Happy to be here.
Yeah. So, Brian, I'm going to ask you a few questions a little bit. This is really a continued series that NetDiligence has been doing, really in the whole, just scoping out cyber risk and its many different facets of problems and challenges and things like that. We, NetDiligence, support a couple hundred cyber risk insurance companies, a lot of the same carriers, quite frankly, that you support. And so we do this series for the benefit of our underwriting partners, but also the brokerage community that helps evangelize about their insurance, and especially the risk managers, the clients who actually buy the insurance. So we wanted to really just talk about the overall state of cyber risk insurance marketplace. I thought who better to speak about this issue than, someone like yourself. So again, thank you. We just saw each other in Santa Monica. That was amazing seeing you. And we chatted on some of these things. I feel like every time I speak to you about cyber risk and the inner workings of it, I really learned something for real. So thank you again. So there's a basic one. How would you describe the state of the cyber risk marketplace today?
Yeah, it's, coming fresh off NetDiligence in Santa Monica, it was a great opportunity to kind of check in face to face with all the product heads and other kind of thought leaders in the space and vendors and lawyers. And I'll, you go through this, it's a tough time in the market, right? So a year ago, some other lines had kind of moved into a hard market and cyber was kind of tightening up or firming up. But really this year, kind of in the summer, it really moved from, hardening to kind of a hard market. And so that created some significant challenges for everybody, right? So when you think about it, whether it was small business or large business, they were seeing, and we saw a shift, especially from kind of June to July. It was like risks that people were aggressively going after in June was like everyone was off the table and completely changing their appetite. Now, some other markets had made changes earlier, but it felt like there was a holistic shift. I'm sure there was, reinsurers pushing hard on insurers to make some updates. There was a lot of claims in the market, right? So you saw a bunch of noteworthy ransomware events, and I think it caused markets to pause, to reevaluate their appetite, things that they were already kind of doing, but it pushed everything into overdrive. And so, we were seeing a tightening and kind of a reduction in capacity from some markets. And so that's kind of been accelerated. And now it's kind of small, medium, and large are all facing similar issues. So we're seeing kind of, because of all the ransomware claims, obviously loss ratios have gone up. So it's forced carriers to start asking a lot more questions of small, medium, and large accounts, right? They're going to get more granular on a lot of the controls, certainly a lot of common themes. But it's moved to a place where if you don't have some of these controls in place, you may be uninsurable, or you've really got to focus. And so the speed at which all this changed has created some significant challenges for clients that haven't been able to move as quickly, right? So that was probably the market doing them a disservice and not holistically everyone kind of coming to some standard agreements on basic controls that are necessary. And so risks were kind of caught, behind the eight ball, so to speak, and that they don't have certain things in place. So those were big challenges. I think that, the bigger kind of issues there are, MFA at multiple levels, remote access to your network, MFA around email, MFA with kind of high credentialed users. A lot of these questions weren't being asked in the past. And now even at the smallest risk, carriers are asking it. And if you don't have it, you may not be able to get insurance, or you certainly can't get them from some carriers that would consider that before. And I think because of all this dislocation, what probably clients, brokers, underwriters, everyone's experiencing is there's not only a capacity crunch as far as for a given risk, but there's also a bandwidth issue, right? Everyone at your conference that I walked around said, I need to hire a bunch of people. I need more people, right? And if you think about the kind of holistic kind of environment, it's underwriters and brokers had huge books of business that 80% of it would kind of be on autopilot for renewal, right? Nothing's really changed. We don't expect any major changes. we should be able to roll this program over fairly easily. And so that went to every single risk is up for grabs and being re-underwritten. Capacity may be shrinking. You may need to slot in new markets. You may need to replace the entire program. That's just on the renewal business, never mind all the new business that's out there that's moving around, or risks that currently weren't buying and saw all these noteworthy events started pushing to say we need coverage, or we need more coverage. And so, brokers, their desks are full, redoing every risk that's on their desk. And so, you probably see a lot of clients and retailers alike that say, I can't get a response. I can't get a timely response. And that's because everyone is completely full from that perspective. So I would say the market's a bit tough from that perspective, but ultimately, asking more questions of insureds and driving better, risk characteristics into the market and forcing insureds to put adequate controls in place is a long-term good thing. It's just happening quickly. And so that creates a bit of chaos for everybody, I think.
Yeah. I mean, that's a good summary. I would say, yeah, I mean, at our conference, you hear perspectives from the clients, the brokers, the underwriters, the reinsurers, and they all kind of converge together. And it's pretty interesting. I mean, we're hearing anywhere, some of the markets are saying they're declining up to 80%, of renewals. It's driving, obviously, your broker peers crazy, that kind of thing. They're hypercritical on certain controls, of course. If you want to maintain ransomware coverage, you're going to have all these special things in place. I don't think it's all doom and gloom. I know we'll get to that, but I want to stay on this whole challenges thing, because it is the holy, grail issue of the year. Like what are some of the challenges? Let's stay on that issue for both the clients, but as equally the underwriters, and getting adequate coverage being the key there. Because I was talking to one broker whose client had $20,000 premium go up to $200,000 for the same stuff.
Yeah, it's amazing. You're seeing clients that say, well, wait a minute. They aggressively wrote my coverage last year and were below, our previous carrier. And this year they're non-renewing me, right? So it's an amazing kind of movement in the market quickly. And so, from an underwriter's perspective, they're getting calls from on high, the product head, reinsurers. They all look at this and say, okay, here's updated controls that we require, right? They've got to have endpoint protection from certain vendors, pre-approved vendors of each carrier. They've got to have MFA at multiple levels. They've got to have segregated backups, and people are taking a harder look into that. So from an underwriting perspective, it's a lot more work for every individual risk that's coming across your desk when you have to really dig into some of these controls, and you're answering a lot of questions to brokers and kind of upset clients that are saying, wait a minute, why is my price going up? I've made improvements from last year. They're not in this all day, every day, where they really understand the dynamic. And so it requires a high level of kind of education of clients and brokers as to what's going on if they're not in the cyber market all day, every day, and they're kind of occasionally they have with a client, they're focused on it. And so, the underwriters are sitting there with a whole new list of controls they need to dig into. There's a lot less kind of flexibility as far as compensating controls around certain things, or willingness to kind of sit and listen, partly because everyone's desk is exploding. And so they don't have the time. And that's tough, especially with a larger account where some of the application questions aren't really yes or no. Right? Yeah. There's a lot of times there needs to be, some discussion or some ability to fill in the gaps and explain why you might not have something and what you do to kind of mitigate that risk. And there's not nearly as many underwriters that are sitting around saying, okay, we can listen to that and adjust our terms, and really kind of old-fashioned underwriting, a little bit more art than science in some of that. And so that's a challenge for the underwriters to kind of serve the brokers that they've been serving, and produce a book of business that hopefully the loss ratios trend back down, and they can feel comfortable that they're going to be sustainable, right? Because if it continued in that direction, the market would pull back so dramatically or price themselves to the point that then it's not serving the purpose it's there for. So the focus on controls is necessary, but that's a huge challenge for the underwriters that, they look at this and you could have a list of 80 controls, and if one of them's off, a lot of markets just say, nope, we're not writing that anymore. They don't have everything. We can't even consider it. So I think that's a big challenge. I think there's also a challenge around for the underwriters. Some of the questions aren't as simple to answer. It doesn't say, do you have, what percentage? A lot of times they're not asking what percentage of endpoints do you have these, software on. It's, do you have it, yes or no? And so I think there's some kind of things that get lost in translation there as far as, what percentage do you have these things on? So that's a challenge. And then when you think about, clients, they're seeing, carriers reduce their capacity significantly. So they might have had a good standard market, put up 10 million on their primary last year, and maybe this year they're lucky if they can get 5, right? We're seeing in tougher classes, carriers borderline non-renew just by saying, or actually non-renew, but sometimes they're just saying, well, we can offer you 1 million on a tougher class of business. That puts a client and a broker in a position where you've got to stack many markets, and they all have varying appetites on what they would do on the primary, acceptable controls, acceptable kind of pricing guidelines. So we're seeing towers that are getting inverted where the pricing on the second layer is more than the first layer, particularly because that carrier might not write the primary, but they'll write the excess, but they totally disagree with the pricing. So you're kind of stuck putting together some puzzle pieces that don't always fit together neatly. And so for clients, they find that kind of frustrating, right? They're not understanding that last year it was easy. It's always been a little bit easier. And all of a sudden now, even though we think we have better controls than last year, we can't get the capacity we want, or we're going to reduce our overall limits because the pricing has gone up so significantly that we don't either have the budget for it, or we're just unwilling to pay that much. So we certainly have seen risks reduce limits in certain cases, purely from a price perspective. That's not always the best scenario when you're looking at just managing their overall risk. They probably just, weren't prepared for where the market's going to price them now and on a go forward basis. So those, clients, seeing rates go up, seeing deductibles go up, seeing terms tighten, seeing a focus on your controls is a, more challenging process than it was, right? Cyber was kind of when a broker and a client were buying the coverages, a lot of them renew on the same date. So they might be renewing their D&O and their property and some other things. And all of a sudden, cyber's gone from a small percentage of the overall kind of renewal process to a much larger percentage. And so I think that's a bigger challenge for clients than it has been in the past.
Yeah, and we ourselves, NetDiligence just went through our renewal, and that was no picnic. I mean, we came out well. I mean, knock on from Micah here, but
yeah.
a hell of a lot more questions. They're much more critical eye, and I honestly think it's we're going to look back in a couple of years and say, we're looking at endpoint protection now as a baseline standard of care and control.
Yeah.
It's going to be looked at like the way antivirus has been looked at for 10 years. Like, why, how could you have not had that, or a cloud backup, immutable backup type of a thing. But I think there's pain in the beginning because, the client's seeing these things right upon renewal and they're trying to get their ducks in a row. And there's just, like you described earlier, chaos. So, well, let's move on to, technology. Of course, we're in the cyber risk area. Technology plays a huge, huge role. The threats are constantly changing, the threat vectors, but as well as the efficacy of the safeguards out there. One thing I love about our conference is we have, 550 people there. A lot of them sell technology, and cooler solutions coming up every time I go and trying to learn, what works, what doesn't work, what's too costly for an SME. That to me is the fun part. It's just trying to figure out the puzzle. So let's talk a little bit how technology is playing a very important role in the cyber insurance space today.
Yeah, this we could go on for hours on this one. It's really fascinating, and we're kind of in a unique position, insuring cyber risk and looking at the defenses, but then also as an industry, how do we utilize technology in a way? And so, there's, from the underwriting perspective, you've seen the advent of the insurtechs. You've seen a lot of kind of scanning technology outside in looking, and it's been interesting to see for kind of people that aren't as familiar, the standard application process of a PDF and then an underwriter reviewing it to, integrated scanning as part of your underwriting process with automation all around that allows carriers and or MGAs to write a risk in a much faster fashion. I think potentially more accurately, right? You can see the process of them catching certain things in an application that has an embedded scan as part of it. So some of the things we'll see there, right? You can easily catch things like open ports. That might be a way that ransomware gets in. And so you can see risks that in the underwriting process, we're using that technology would cause them to either decline or refer the account, where in the past they wouldn't have been able to see that, and they would have just written it somewhat blindly. And so the scanning is interesting. I think it's really interesting when you start seeing things like out-of-date software get caught, right? A lot of brokers are using these reports to go to clients in the kind of renewal process, just to highlight things that they found, like, hey, you need to start looking with your people internally or externally to fix a bunch of this stuff. right? You don't have SPF or you don't have DMARC in certain places. And so, I think it allows brokers to serve their clients better when you see that. Hopefully it's allowing underwriters to underwrite more appropriately, and avoid risks that they don't think are adequate, or reasonable. The out-of-date software is really interesting too. When you saw, like last year, or earlier this year, it seems like a year ago, when Microsoft announced their 0-day vulnerabilities, that my phone, it was like a Saturday afternoon. It was like I got 200 emails, from a variety of carriers saying, hey, we've scanned every single insured and we've notified these insureds directly that they have this issue. And we've prepared, a way for them to kind of go through the process to fix it as fast as possible. You weren't seeing that from carriers 5 years ago, maybe even 3 years ago for that matter. And so that's allowing, the community to better serve clients at the end of the day, to be able to notify them, because sometimes you've got the IT side of the house, and then at the insured, the buyer of the software may be different. And when you think about SMEs, a lot of times that's outsourced, right? So that notice may go to the owner of the company, and they may be then reaching out to their managed service provider or someone to say, hey, what are we doing about this? And in the past, they wouldn't even know. If they did know, they might ask a question and get, yep, we're fine, we're okay. And they're just going to be forced to believe them. And now they have credible intelligence to walk over internally or externally and say, hey, like, we got to fix this. What are we doing? And so from a technology perspective, I think a lot of that is really useful, in the underwriting process. A lot of people, obviously, at your conference and otherwise, talk about insurtechs, talk about what they're doing, a lot of the newer kind of things that they're bringing to the table, and carriers are certainly doing the same, whether that's internally or externally, with third-party kind of partnerships. And so I think what it's allowed the industry to do in the SME space is to automate more, right? You can see that they can ask, a large number of questions and then scan against it, for things that they can see without having to ask. And so I think ultimately it's bringing a little bit more efficiency to the process in the SME space. And for us, a lot of that automation, we look at kind of APIs, and I think people talk about them and they kind of generally understand what they are. But we focus heavily on them with carriers, and MGAs as a kind of way to bring efficiency to the process, across the board. And so that's kind of, there's days I feel more like a tech company than an insurance business, because we get so focused on the process and automation, and how do we make this process better and more efficient for kind of retail brokers by using technology. Because their challenge, what we always saw, and we've probably talked about this a few times, is, when in the SME space, a lot of brokers say, well, okay, I need to write this, but if it's $1,000, $2,000 policy for a startup, how can I spend hours and hours explaining all this to my client and procuring quotes and then manually trying to put together a comparison? I mean, they're losing money. And on top of that, they didn't probably really understand the coverage and all the granular technology related terms. And so it was probably, without kind of all these efficiencies, it was really inefficient way for a broker to bring cyber to their client. And so I think a lot of them chose to kind of avoid it, or just say, here's a policy, this is good enough. And really, it probably wasn't broad enough, or up to snuff with what was available in the market. And so they were taking an easier path, and the clients wouldn't know this. And so with technology being able to automate, especially the way kind of we think about it and others do with APIs, it really allows the flow of information from an agent or a client directly into an insured and back in kind of an instantaneous timeline. And that wasn't available a couple of years ago. And so APIs are really kind of opening up our eyes there, and how do we make it more efficient for retailers, but then how do we make the process better for carriers? And so we spend a lot of time with carriers and retailers talking about this, of how do we improve this, especially with a lack of bandwidth in the environment right now. And how do you speed up or bring automation to larger risks, the kind of $100 million to $5 billion company. And so a lot of that can still be done with APIs. It just eliminates a lot of the kind of data entry and rekeying for everybody in the process. And so, technology in the underwriting and brokerage space is going to continue to evolve, and I think bring better service and better pricing to the market, and more accurate pricing. And so, that's really interesting. And I think what's also interesting on that part is the ability with those scans to see certain things, whether, risk characteristics. A lot of times we see someone answer a question one way on an app, and we see something different in a scan. And that's another challenge in the industry, to start figuring out how do we get the most accurate information to actually underwrite. So, that's interesting. And then on the other side of technology in this space is, all the focus on the controls and the kind of risk mitigation tools that you can use. In this landscape, I think clients oftentimes, at least the risk manager or the person that's buying the insurance is not really up to speed with things like they've probably heard of MFA. They've maybe seen that, when they log into their own personal banking institution, but they haven't necessarily kind of focused on it internally. And so what we see kind of in the SME and kind of middle market space is a lot of times the technology people or our own internal IT people are pushing for some of these controls. We need to go license and implement endpoint protection, right? And there's almost a resistance to it in the beginning when it's coming from the vendors, or it's coming from someone that feels like they're being sold something that they don't want to buy, or they don't know whether they need to buy it. And so it's easier for them to kind of say, no, I think we just need some of the basics and, we'll be okay. And they'll listen, but they kind of feel resistance. Whereas if the education is coming from the underwriters and the brokers to the client, these are the things that are necessary for you to be insurable. And if you don't have them by next year, you're not going to be able to get coverage. We see clients, small and large, much more willing to listen, learn, and then they're going back internally or externally to the providers saying, okay, I believe that I now need this. Can you go do this? And they say, of course we can do that. That's, these are simple things that we can do. So I feel like the education piece related to these technology controls and the kind of things that the insureds need to adopt is really kind of incumbent on the brokers and carriers to educate the end client, small, medium, and large, on all the updated controls they need, because they're much more willing to engage and potentially buy and implement these things if they understand it versus being sold something in the other direction.
Yeah, dude, you hit the nail on the head. I mean, all the preaching or benefits is coming a lot from the underwriting broker side, someone like yourself. And that in past years, never really got communicated to the IT guys, and they're finally paying attention because their CEO or COO was saying, guys, we're not going to get insurance unless we have this kind of technology in place, like endpoint, EDR endpoint. I mean, shame on you. I don't know how you sleep at night if you don't have endpoint in place right now. It's $12 a computer, and it takes like 2 minutes to install. For an SME, it's like it's a no-brainer. But I think everybody's going to look back on this in a couple of years, like I said early on, and say, gosh, I can't believe I didn't have this, this, and this. Some of those things really can decrease the frequency and severity, like you mentioned, MFA, cloud backups. Those things that right there can really help and benefit any kind of SME company.
Yeah, so, and then you got to also think about, how do we make this easy for businesses when you tell them they need to go do? Here's 7 or 8 things you need to go do, right? You can kind of narrow it down to say, here are the vendors. And we've seen some people that are really focused on how do we even automate that so it's really easily scalable, deployable at an enterprise level for a smaller middle market company to do these things quickly. That's a big challenge, but from a tech perspective, the easier you can make it for these people to deploy things, especially the critical controls, will really improve the kind of speed and adoption of what we kind of need these risks to have to be able to get coverage.
Yep. No, thank you, Brian. That was wonderful summary there. Greatly appreciate it. My hope is me and you will circle back in Q1, Q2 of 2022, and maybe we'll do a little webinar for our combined communities on this and just keep building on it. Because like you said, the first question alone, I could have let you go for an hour. So that was great.
It's the timing is probably good, right? Because you'll have all the reinsurance renewals that are effective 1/1, and we'll see the impact that they have on the underwriting side of the house as far as rates and capacity and continued push on controls, and that's critical to see how this continues to evolve. And we want to make sure that the market is, available to the end insureds to be able to, actually place the coverage that they need at a reasonable price point. So I'm hoping, as the pendulum swung really hard this summer to kind of a very hard market, that while even with the reinsurance renewals, I'm hoping that it starts to come back a little bit closer to the center and things settle down a little bit to make this kind of, a more usable, user-friendly market for the end clients.
Yep. Agreed. All right, man. Listen, well, happy Monday. Thank you so much. Greatly appreciate it. And we'll talk soon.
Yep. My pleasure. Good to see you.